Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 23rd of May 2019. My name is Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's take a look at the overnight changes and price moves to be aware of. First of all, I just want to draw your attention to the continued weakness in the British pound against the US dollar. The pound trading around 126.3850 shortly before we recorded the video and testing towards 4-month lows at these levels. As you can see, we were down by 0.18% against the dollar overnight, but of course that isn't a flash in the pan. We've seen negative momentum building in the British pound over the last week, month and year, and of course that's symptomatic of what happens in FX. Long-term trends are all about momentum, and that tends to build over a period of weeks and months. Elsewhere, we have seen moves in the Canadian dollar and the Mexican peso. The Canadian dollar, I should say, falling by 0.13% against its US rival. The Mexican peso giving up a further 0.19% against the US dollar overnight. We've also seen the dollar itself moving higher, dollar index up by 0.12% in Asian trade, and adding 0.3% to the good over the course of the last 7 days. Emerging market currencies on the back foot once more, symbolised here by the rand, dollar rand trading at 14.3829, the rand down by 0.14% against the US dollar overnight, and that brings the weekly losses for the rand to 0.66%. Pause for breath in the cryptocurrencies, with Bitcoin and Ether making modest moves. Bitcoin slightly better, Ether down, although it's interesting to note that they're both down on the week. I think the moves we've highlighted in this section so far are symptomatic of the market feeling more risk off than risk on. Okay then, what's on the calendar? Events that may move the markets today. Well, we had some fairly light calendars earlier in the week. No fear of that today. We've got a packed programme. We're almost sport for choice, I think, in data to look at. To come at 0600 hours, we'll have the first of the day's important data in the shape of gross domestic product out of Germany for the first quarter 2019. That's both quarter-on-quarter and year-on-year data. Then at 0630, we'll have Swiss industrial production year-over-year for Q1 2019. Then we're back in Germany at 0730 for the release of preliminary PMI data. That's for manufacturing, services and composite, all for the month of May. And then half an hour later at 8 AM GMT, we'll have the influential IFO expectations, current assessment and business climate surveys, all for the month of May. So a real chance to give a top-down and bottom-up examination of the German economy there. At 8 AM, we'll also have the release of market manufacturing, services and composite PMI data, again preliminary reads out of the Eurozone. And then at 0840, the first of the day's central banker speeches, and this from the ECB member de Guindos. We pause then until 12:30 GMT, and we cross over the Atlantic at that point to the USA for continuing jobless and initial jobless claims out of the States. At 13:45, we shall have market manufacturing, services and composite PMI data, again preliminary readings from the USA. And then at 1400, it's the turn of new home sales for the month of April out of the US. An hour later at 1700, we'll see three central bankers take the stand to speak simultaneously in the shape of the Fed's Kaplan, Daly and Bostic. And then a pause until 23:30 when we cross over the Pacific to Japan for national CPI, both inclusive and exclusive of food. Year-over-year data this for the month of April. Okay then, breaking news and comment that's caught my eye overnight. And first of all, Japan's flash manufacturing PMI fell to a worrying 49.6 in May, entering contraction as both the output and new orders components of the data fell for a 5th month in a row. Meanwhile, exports were lower for the 4th time in a row. The fact that we're now seeing repetitive falls in output, new orders and exports suggests to me that the Bank of Japan and Shinzo Abe need to take note about this week data. Yes, it was flash, so a preliminary read, and of course the final read could be different, but the trend is worrying, and I think the markets will be looking for some kind of reaction from the Japanese authorities. The Fed minutes released last night suggested that the central bank is prepared to play a waiting game on US interest rates, though they did indicate they could adjust some money market rates if they are required to do so in the balance of 2019. The European Union has said it is ready to begin trade negotiations, but believes that the US requires more time and that for now the focus for both parties is on China. And finally, UK Prime Minister Theresa May faced an outright revolt from her cabinet last night, and one minister resigned over what they see as a lack of Brexit progress and the Prime Minister's intransigence. The PM's days in office are now thought to be numbered. Right then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? Goldman Sachs has said this morning that the chances of a continuing trade war stalemate have risen, as has the likelihood of additional tariffs from both the US and China. Meanwhile, Bloomberg strategist John Authers has urged traders to exercise extreme caution when buying anything China related. Now, you might think that perhaps the markets haven't been pricing in the trade war risks appropriately, but Bloomberg's done some research and this suggests that in fact they have. The blue line here is the S&P 500 index. The white line, those firms that are quoted in the US with a large exposure to China, and as we can see, since the beginning of March, we've seen a marked underperformance from those China-related stocks. So stay away, or at least do exercise a degree of caution when looking at China-related investments, because the landscape can shift very quickly, I think is the message there. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And as I say, do take the time, please, to read this risk warning thoroughly. Thank you very much today.